What if you could predict when the market's about to pump or crash? Well, the VIX Index is a helpful tool for exactly that. Let me show you how. But alright, so let's begin here with the very important question. What is the VIX? Or in other words, what is the Volatility Index? Well, in simple terms, the VIX basically measures how much the market expects the S&P 500 to move in the next 30 days. And if you don't know, the S&P 500 is basically the largest stock market index in the whole world. So it's like the 500 biggest and most profitable companies in the US, and the US is the largest market. So the S&P 500 is basically a very good measure of the stock market in general. And the VIX measures how much the market expects this index to move. And the VIX is actually based on options prices. When traders expect big moves, they will pay more for options, and this will actually push the VIX higher. So a simple beginner-friendly way to think about the VIX is that you can think about it as a fear meter. So when we have a high VIX, we usually have more fear and more volatility in the market. And when we have a lower VIX, we usually have calmer markets. And an average VIX is around 20. So now let's just quickly jump into TradingView. We are currently looking at the VIX index. You can see that up here in the corner. But for now, I just want to show you that the normal VIX is around 20. So you can see right here is the line for 20. And you can see that it's very common that the VIX is trading around the 20 level. But as you can see, recently, the stock market has been crazy. And you can see that the VIX actually spiked up all the way up here to 60. And this right here will be very important for later in this video. But for now, I just wanted to show you that the VIX tend to be around 20. But all right, so why is the VIX sometimes called the fear index? Well, it's called that because VIX jumps when investors and traders are scared. Like, for example, during crashes. Like I just recently showed you guys, the VIX recently spiked in the stock market, and that was during basically peak fear during the latest crash, or the crash we are in right now. So a common saying here is that when VIX is high, it's time to buy, and when VIX is low, it's time to go. This is a very simplified sort of quote, but there is definitely some truth to this, and we will talk about that soon. As I said, it's not perfect, but it is a popular market sentiment measure. Now, how is the VIX calculated? Well, right, so this video was actually just a very short clip from our full guide on the VIX index. To watch the full video, simply click or tap on the screen right here. I hope I will see you all over there very, very soon.